Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to take a look at yesterday on the USE minis, in particular the ES, to see how the market unfolded on the 31st of August. So let's have a look at how the market unfolded. Well, you can see here we had some nice setups towards the short side and the long side. If you'd taken that TS3 sell, it'd been very nice. If you'd taken that DP buy, it'd been very nice as well. Remember, any losing trades we keep small at -1 hour loss by using our correct position sizing. So the hardest thing yesterday would have been to define the larger degree trend. If you'd used the STF, you'd have primarily been short and had some a losing trade here. You'd then have probably been short off this high. Whoops, I'll just clear the chart off. Short off this high here, coming down. You then come into the TS3 buy setup. STF is grey. You'd have probably said, well, actually I want to reverse this to long. So you'd have banked 2.3 hour profit. Notice how profits are larger than the losses. You may well have then gone long there and said, well, actually I like the idea of being long. That would have produced a -1 hour loss. You'd have then avoided the DP buy, come in here at the end of the day for this TS4 sell, and then made plus 2.5 hour profit at the end of the day. So the point being is that you would have actually made money at the end of the day by keeping the losses small and having profits that are larger. Let's have a look with a view of the larger degree trend. If we place the DP on from the last pivot, which would have been here, you can see that the DP caught the low of the day yesterday. It actually went slightly below it, then reversed back again. So you would have looked at this and thought, well, this is probably 15-minute support, therefore I want to be long yesterday because the larger degree trend is now up. If you'd been viewing that way, the market rallied, you'd have been avoiding these sell setups, you'd have had that TS3 sell that the TS3 buy there that we already looked at, and we know that would have been a -1 hour loss, but you'd have also come in to this DP buy here because you'd have deemed the larger degree trend to be up, and that would have then given you a nice 3.3 hour profit. So again, you'd have been about 2 hour up. So it's interesting here that whether you would have been on the short side or the long side yesterday, you'd have both come out with about 2 hour profit. It shows you how important using position sizing here is, and by using correct position sizing to keep risk control at the forefront of your trading. So if you control risk and have losses that are small and profits that are large, even if you are slightly confused about the larger degree trend direction and you don't actually get the larger degree trend direction right, you can still come out at the end of the day making money. And that's the most important thing with trading, is not about being right, it's actually about risk control and keeping those losses small and actually making money at the end of the day. So I thought that was a very good example to do yesterday to show how even whether you were looking to be on the short side or the long side, you'd have made money both ways. But let's turn to looking at this with a bit more of an advanced eye. If we look at the 15-minute chart and we look at the range for yesterday, so I'll put the high-low close on for yesterday, you can see that the previous day, the previous day's range was very narrow. I know we've had some very big wide range days recently, but even compared to prior days going back before that, the range for the 28th was actually quite narrow. So that means that this DP was coming off a pivot made from a very narrow range day. So that may have changed your view slightly in thinking that this DP support may not have been quite as good as you originally anticipated because it only came off a smaller or less important pivot. So if you'd looked at that and said, well, actually I like the idea now of potentially being short, particularly when you have this TS3 sell come in with such this high volume spike. Look at this here. On that bar, which was the 1142 bar, look at that really high volume VSA spike on our volume. This wasn't a true MTPredictor VSA setup because we'd gone well through the DP from the prior pivot. However, it did actually stop and reverse at our TS3 sell. So you may have looked at this and thought, well, actually, because of the volume, this may indicate that the professionals are now stepping in to start shorting this market, and therefore I want to be on the short side, even though I know that the large trend may be up, but because of the narrow range day the previous day, that support may not be quite as strong as what I anticipate. So you have an option to then go short here. If you had gone short at that high and deemed that the volume was coming in on the short side, you may well have held it down, perhaps not into the low of the day, but maybe you would have looked at the DP from the prior wave B, which is here, and said, once I come into this low, I look to bank 5.4 hour profit. Very nice indeed. Again, can you see how the MTPredictor is a toolbox that allows you to analyze and assess the potential risk to reward on your trades? In other words, what the potential profit is in relation to the initial risk. You could have been even more conservative than this, in that once you'd seen this high here, even though you may not have taken it, you may well have said, well, I think the high's in, so now I want another lower risk opportunity to enter a short trade on a first correction or an initial correction to the decline down. We know from our teaching in MTPredictor that if this is an important high, now we normally have this at higher time frame support or resistance, but here we're deeming this as a high because of the volume. We have the initial decline down, this initial correction up into a potential wave 2. Ideally, we're looking for this wave 2 to unfold in a minor ABC, which is exactly what it did. So this could be a holy grail trade setup. For this, we then go down to the shorter time frame chart, and we can see on the shorter time frame chart, there's our TS3 sell. There was a history triangle first, but that would not have been filled because the next bar opened, then made new highs, invalidating the previous setup, and then came down to give us a new TS3 sell. So can you see now how if you missed this initial high, this potential holy grail trade setup here on the initial correction to the initial decline of that high gave you another opportunity to be short. Because this was a holy grail, you're looking to come down into the typical wave 3 WPT, which is down here, so that would have produced a nice 5-hour profit. But can you see how the tools in the software allowed you to look for this particular trade setup, knowing about a potential holy grail and knowing that a minor first correction to a new Elliott wave sequence typically unfolds as a minor ABC, which comes in as our TS1, TS3 or TS4 setups, and then that allowed you to then assess that, keep the position sizing under control, so keep the initial risk small, and then again allowed you to have a profit that's larger than the initial risk or potential losses. So again allowed you to analyze the market and assess a particular trade setup. So this is MTPredictor's strengths, in that it's a tool set that allows you to analyze trade setups and actually identify potential profits in relation to initial risk. That allows you to make an informed trading decision based on how good you believe that particular trade setup is to unfold. So I think yesterday has been a very good example of how it's more important to actually control your risk and have profits that are larger than your losses to then be able to make money over time. And sometimes you can do that without not necessarily getting it right on the market. There's so many amateur traders focus on they have to be right, they have to get the large trend direction correct, they have to do this, they have to do that. Whereas in reality, as a trader, the only thing you really have to do is control your risk. So I wanted to do this video today to show how, even though yesterday the large degree trend could be quite confusing, as long as you're consistent with that you could have made money on the short side, or you could have made money on the long side by controlling your risk and having profits that were larger than those losses. Keeping the losses small and profits large is a fundamental part of trading. And then also how a little bit more advanced knowledge of volume in the market, and then not only that, but if you missed that volume sell there on the high of the day, how your knowledge of our MTPredictor Holy Grail trade setup would have then allowed you to come in on the initial correction there to the decline of the high for a potential Holy Grail sell on the shorter time frame, which again would have got a nice profitable trade. So lots of different ways to analyze the market yesterday, but the fundamental thing across all of them is keeping the initial risk small and your losses under control and having profits that are larger than your losses, and that is the most important thing to any successful professional trader.